This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past year, the U.S. labor market has remained one of the strongest pillars of the economy. Employment levels stayed relatively steady, and job opportunities remained available across many sectors, even as broader economic conditions shifted. In the months leading up to this week, however, economists began to notice subtle changes. Hiring growth, while still positive, started to slow compared to earlier periods. Businesses became more cautious, focusing on efficiency and cost control rather than rapid expansion. At the same time, certain industries such as technology and finance showed signs of workforce adjustments, while service-based sectors like healthcare and hospitality continued to hire steadily. This week added more clarity to that evolving picture. Recent labor market indicators showed that job creation is continuing, but at a more measured pace. Employers are still hiring, but they are being more selective, often prioritizing experienced candidates or critical roles. Jobless claims remained relatively stable, suggesting that layoffs are not increasing significantly. This indicates that while hiring may be slowing, the overall job market is not weakening sharply. Looking at the broader trend, the labor market appears to be transitioning into a more balanced phase. The rapid hiring surge seen in earlier periods is easing, but stability remains. This creates a mixed but generally steady signal for the economy. For households, this shift has important implications. A stable job market supports income security and financial planning, allowing families to manage expenses and maintain confidence in their financial future. However, a slower pace of hiring can make it more challenging for job seekers, especially those entering the workforce or switching careers. Competition for roles may increase, and the hiring process could take longer than before. Many households respond to these conditions by focusing on job stability, skill development, and careful financial planning to navigate a more competitive employment environment. As a broader cultural reference, shifts in hiring trends are often reflected across industries, from large corporate offices to everyday service roles, showing how deeply employment patterns are tied to overall economic momentum. Looking ahead to next week, analysts will be watching key labor indicators such as weekly jobless claims, hiring surveys, and employer outlook reports. These signals will help determine whether the job market continues its current path of stabilization or begins to shift more noticeably. For now, the message is clear. The U.S. job market remains steady, but the pace of hiring is gradually cooling. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with